It is July 2024, and what's going on in the housing market. So let's hop right in and see what things are cooking. So Lawrence Yun, chief economist of NAR, said home sales have lingered at 30-year lows, and since 70 million more Americans live in the country now compared to 3 decades ago, it is inevitable that sales will rise in coming years. Inventory will grow steadily for more new construction, and various life-changing events will require people to trade up, trade down, or move to another location. So, this has kind of been our story for a while. We got low inventory, we got more people. They are starting to build more throughout the country. In the Northeast, we are still seeing low inventory, while the other parts of the country are starting to see some declines in pricing, a little bit more inventory. Some areas in Florida, Texas, Nevada, you're seeing some of this around as well. So what we're seeing this year, I think, is going to be nationally probably about average of what we saw last year. But I think locally, we're probably going to actually see less inventory. For about halfway through the year, I think we're probably about 10% lower transactions than what we saw last year in the first half of 2023. So we're going to see how this kind of plays out, what kind of makes sense with it. Do we get a little bit more inventory, a little more closings coming towards the second half of the year? Probably, but I still think we'll probably be down anywhere from 5 to 10% of inventory, which is part of why we're seeing these prices increase the way they are. Lawrence Yun also said the market is at an interesting point with rising inventory and lower demand. Supply and demand movement suggests easing home price appreciation in upcoming months. Inevitably, more inventory in a job-creating economy will lead to greater home buying, especially when mortgage rates have descended. So, rates came down to about 6.5 right now. Right now there is still strong demand in our area. But like I said, in other areas, you're starting to see it weaken a little bit. What does that mean for us? At some point, it will probably hit us, or at least we'll get the sounding board effects of it. I don't see any major price reductions coming, as a big area scale for a while. But at some point, they may see a little bit, 5, 10%. But the reality of it is, I think we're a while away from that. We got rates still in the sixes, and I think we'll be here for a little bit. We may see a Fed rate cut coming up, but we may not. We'll see what happens with stuff. The month of inventory supply, so the amount of homes that are on the market, we're definitely up from our bottom points of 2020, 2021, but not by much. We're probably at, maybe 10% more, but we are still seeing, that low inventory number no matter what. It's nothing near, like we saw in 06 to even 2010, where we probably had the most amount of inventory on the market, and it was a buyer's market. So, we talked about interest rates. They came down a little bit. I think they are going to continue to come down a little bit as well. I wouldn't be surprised if we kind of hit an average between 6 and 6.25, maybe, let's say, if they're at 6.5 now. By the end of the year, we'll see what happens, obviously, with the election and what goes on with that. Chief economist, City of New York, put out, City of New York University, when it comes to the real estate forecast for the next 5 years, I'm cautiously optimistic. I believe we're going to see a lot of ebb and flow over the next 5 years, some highs, some lows, but overall healthy market. Prices should continue to rise, though more slowly, and buyers might enjoy more options as their inventory expands. But remember, real estate is profoundly local. What happens on a national scale cannot manifest directly in your backyard. Like we talked about all the time, it really depends on what's going on. We're doing better than some of the other parts of the country, but it's something to watch and kind of go through things. We talked a little bit about the election. How does it affect the market? I think locally it may affect us a little bit, nothing dramatically. Remember, real estate is a lagging indicator. So we're not going to see major changes to the housing market until it happens, and it's kind of 6 months of being reported, whether it's good or bad. One thing I learned through 2008 to 2012 is that, we want to look at where the market's going to be in the next 6 months. We're trying to apply that today. If prices are going up, can we price into the upcoming market? If prices are coming down, how do we be ahead of that? And that's something where we have to be careful and kind of project where things are going, and a lot of big factors of that, supply and demand. Interest rates, at some point it would choke the market, but we've seen them up at 7.5, maybe even 8 for a week or two, and the market still has remained relatively strong even when they were at those high levels. If they stayed there, I don't know if that would continue, but we are still seeing some of that strong supply and demand, and there is still a lot of cash in the system. So Ryan Lindquist, residential appraiser and housing analyst, the election year doesn't alter price trends that are already happening in the market. Absolutely. As we're seeing our market kind of go upward, regardless who gets elected, I think that's going to kind of continue through. So overall, solid market. Seeing a little bit more come on this month in July than I thought we probably would. I think that has to do with a late start to the spring market based on the weather we had. So instead of April, May, June, we're probably May, June, July. But good time to sell. If you're looking to buy, it's still a good time to buy. Prices will probably increase. Rates dropped a little bit. Just have to, deal with multiple offers and kind of get in a home that works for you. So any questions, feel free to reach out. Happy to go over things, whether you're looking to buy, sell, rent, buy investment properties. Feel free to reach out and go over things.